All right, welcome everyone. Let's dive deep into Spotify's Q4 2024 earnings.
Yeah.
You got that Q4 2024 shareholder-final.pdf on your desk.
I do. Definitely a dense one, but yeah, chock full of insights. It's not just about the raw numbers, though.
Right.
It's about figuring out what this all means for Spotify's game plan and honestly where the whole audio and video scene might be heading.
Okay, so first up, the headlines. Spotify totally crushed it in Q4.
Yeah.
Beat their own predictions on almost everything. Didn't just meet expectations, like seriously exceeded them.
Yeah, that's a big sign they're heading into 2025 with a ton of momentum. Moving beyond just music, pushing podcasts and video seems to be working. Users are digging it, and investors too.
The numbers are wild. Added 35 million monthly active users.
Yeah.
Biggest Q4 growth ever.
Wow.
Yeah. Total now is 675 million. Think about it. That's like adding all of Canada to their user base in just one quarter.
And it's not just casual listeners either. They snagged 11 million more premium subscribers. That's a 263 million total. An 11% jump year over year actually matches a record from way back in 2019. Shows people are willing to pay for that premium Spotify experience.
What really impressed me, though, Spotify finally hit full-year profitability. First time ever. 1.4 billion. A lot of folks doubted they could pull it off.
Yeah, it was a big question mark for a while, but this shows they aren't just growing fast. They're figuring out how to make that growth pay off sustainably. And their free cash flow, also record-breaking, 877 million in Q4, bringing the 2024 total to 2.3 billion. That's a lot of financial firepower.
Gives them room to keep investing and innovating.
For sure.
Okay, let's talk about Wrapped. It's their 10th anniversary, and it was massive. Double-digit user engagement growth across 184 markets. People can't get enough of their personalized listening summaries.
It's smart. Wrapped is more than just a fun feature. It's Spotify using personalized data to make these experiences that keep users hooked. This year, they even added those personalized data stories, the custom AI DJ Wrapped things, and even got clips from artists and podcasters.
Yeah, I love seeing those little artist shout-outs. Speaking of branching out, their move into video and podcasts is making waves. They launched uninterrupted video podcasts for premium subscribers in some key markets: the US, UK, Australia, Canada.
It's a straight-up challenge to the traditional video platforms. Spotify's betting that users will love having video podcasts right there with their music. It'll be interesting to watch this unfold, especially as they open up ways for video podcasters to make money with the Spotify Partner Program and that shift from Spotify for podcasters to Spotify for creators.
It's clear they aren't satisfied with just being a music streaming service anymore.
Right.
They're aiming to be the go-to for all your audio, all your video needs. So let's follow the money. How are these different revenue streams doing?
Because that tells you how strong their business model really is and what their potential is for the future.
Their premium revenue grew a solid 17% year over year, hitting 3.7 billion. That core subscription business is healthy.
Yeah, fueled by the subscriber growth we talked about, plus an increase in ARPU, average revenue per user. So not only are more people signing up, they might be going for pricier plans or using more paid features.
Interesting. On the ad-supported side, they had 7% year-over-year growth, reaching 537 million. Pretty good, considering they were facing a tough brand environment.
Yeah, ad pricing was a bit shaky, meaning advertisers were hesitant to spend as much. But Spotify actually sold more ad impressions, suggests their ad platform is getting better at reaching the right audiences.
Okay, now for the profitability picture. This is where their strategic choices are really paying off. They hit a record gross margin of 32.2%, a jump of 555 basis points year over year.
That is a massive jump. Gains in both premium and ad-supported segments are driving this. Audiobooks, music, podcasts, all contributing. It's really something that they managed to grow that ad revenue, especially with the tough climate we mentioned.
Shows how resilient they are. Now, what about the future? Spotify's given us some guidance for Q1 2025.
Yeah, it gives us a peek into what they're prioritizing and how confident they are about continued growth. What stood out to you?
They're projecting total monthly active users to hit 678 million, and total premium subscribers to reach 265 million. Continued growth, but maybe a bit slower than that crazy Q4.
Makes sense. Hard to keep up that pace. But their projected revenue of 4.2 billion shows they're confident about making money from their users.
There's this little detail tucked away in their guidance that caught my eye, though. 18 million in social charges, based on their Q4 closing share price.
Ah, yes. Those are basically payroll taxes tied to employee compensation in certain countries. They're linked to Spotify's stock price.
So if the stock goes up, these charges go up.
Exactly. And if it goes down, the charges go down. makes it tough to predict the exact impact. It's a good reminder that even with careful planning, outside factors can mess with a company's financials.
True for any business.
Welcome back to our Spotify Deep Dive.
All right, so we've covered a lot already. Record user growth, the push into video and podcasts, even their audiobook venture, and of course, that big jump to profitability.
Right, but now let's dig into some of the finer points.
Yeah.
This is stuff that might have gotten lost in the headlines, but is super important for understanding Spotify's long game.
Okay.
One thing that caught my eye was their mention of shifts in competitor dynamics in select developing markets. Now, what's that all about?
Yeah, what does that even mean?
It's subtle, but it suggests they're gaining ground in key emerging markets. Huge growth potential there. Could be a big deal for Spotify going forward.
So like India, Brazil, places like that, where more people are getting smartphones and better internet.
Exactly. Any company wanting to grow globally has to tap into those markets. Spotify also highlighted how well their automated sales channels are doing. It means their ad tech is getting more sophisticated, targeting ads better, and making more money for advertisers.
So like using algorithms and data to make sure the right ads are getting to the right listeners.
Exactly. Making ads more relevant, less annoying, which is good for everyone. Oh, and they also mentioned a 25 million euro impairment charge related to real estate in Q4.
Wait, hold on. For those of us who aren't finance experts, what's an impairment charge again?
Basically, it means they had to lower the estimated value of some of their properties.
Yeah.
Not necessarily a red flag, but something to watch. Might mean they're adjusting their physical footprint, maybe adapting to more remote work or shifting their focus geographically.
Interesting. Shows that even a digital company like Spotify still has to deal with real-world stuff. Okay, this one really stood out to me.
Yeah.
They said they paid out a record $10 billion in royalties to the music industry in 2024, bringing their total payout to almost $60 billion since Spotify started.
Wow, that's a massive number. Shows how important they are to the music ecosystem. They're committed to paying artists and rights holders fairly, which is crucial for the music industry to thrive.
It's easy to forget that behind all the tech and algorithms, there are actual people making the music we love.
For sure.
Okay, let's circle back to those social charges. I'm still a little fuzzy on how they work and why they matter so much.
It's a perfect example of how even tiny details can have a big impact on a company's bottom line. Remember, their Q1 2025 guidance includes $18 million in those charges, but they're tied to their share price.
Right, so if Spotify's stock goes up, those charges go up too.
You got it. And if the stock goes down, charges go down. Makes it tough to predict exactly what will happen. Another reminder that financial projections always have some uncertainty baked in.
True for any business, I guess.
Yeah.
They also had that section in their report, the forward-looking statements, with all the disclaimers about risks and challenges. What were some of the big ones they highlighted?
Well, they covered a lot of ground. Competition for users and ad revenue, the whole mess of global content licensing, managing a fast-growing global workforce, all things that could impact Spotify's future.
And as they branch out into podcasts and audiobooks, that opens them up to even more legal stuff, right?
Mm-hmm.
Copyright issues, content moderation, all that.
Absolutely. They're also super dependent on other companies' platforms and tech, stuff they don't control. Like if Apple changes its App Store rules or Amazon makes a move with its music service, that could directly impact Spotify.
It's wild how interconnected everything is.
It is.
Their success isn't just about what they do. It's about how they deal with all these other players, partners, and new technologies popping up all the time.
Right, and that leads us to another key area, their advertising platform. Despite some pricing pressure, they managed to grow ad revenue in Q4. Shows their advertising model is pretty resilient.
Yeah, especially with that softness in ad pricing we talked about.
Yeah.
So what's driving that growth?
They've been steadily selling more ad impressions, meaning more advertisers are using Spotify to reach its massive audience. This is partly because they keep refining their ad targeting and offering new, innovative ad formats.
So they're using what they know about user data and listening habits to deliver really targeted ads that people actually respond to.
Exactly. It's not the old spray and pray approach anymore. It's much more personalized and effective. They're even testing out interactive ads and sponsored playlists to make ads more engaging.
That makes sense. Nobody wants to be bombarded with irrelevant ads. But if an ad is actually interesting or relevant to me, I'm more likely to notice it.
Exactly. But even with all that, Spotify's ad strategy has its challenges. They're up against giants like Google and Meta for those same advertising dollars.
It's the battle of the titans.
It is. To stay ahead, they have to keep innovating, refining their targeting, and offering ad formats that advertisers love and listeners don't hate.
It's a tough balance. But so far, they seem to be doing okay. Before we jump into what the future holds for Spotify, I want to touch on something we don't talk about enough: their impact on the creator economy.
Good point. Spotify isn't just about listening, it's a powerful tool for creators. Musicians, podcasters, video makers, authors, they can all reach a global audience and make money from their work.
And they're really embracing that role, investing in tools and resources to help creators grow their audiences, build their brands, and make a living from being creative.
It's good for creators and it's good for Spotify. More creators, more listeners, more advertisers, everybody wins.
But it also raises questions about the balance of power. How does Spotify make sure creators get paid fairly and have a say in how the platform works?
That's the million-dollar question. There's a lot of debate about how streaming platforms can make things fairer and more sustainable for creators. Spotify is trying out things like fan subscriptions and tipping to give creators more control over their earnings.
Interesting. It'll be fascinating to see if those models work and if they can offer a real alternative to the traditional way royalties are handled.
For sure. It's complicated, no easy answers. But Spotify seems to be genuinely trying to find solutions that work for everyone, which is a good sign.
That is good to hear. Okay, so we've covered a ton in this part: emerging markets, ad tech, those social charges, and Spotify's role in supporting creators.
Ooh, yeah, quite a journey. But we're not done yet. In the final part, we'll zoom out and look at the bigger picture, explore some scenarios for Spotify's future, and how they might navigate this crazy world of media and technology.
And we're back for the final part of our deep dive into Spotify's Q4 2024 earnings. We've seen their amazing performance, talked about them moving into podcasts and audiobooks, and how they're impacting the whole creator world.
Lots to unpack, but now let's put on our future predicting hats. What might be next for Spotify?
Yeah, predicting the future is tricky. But if we look at what's happening now and think about the possibilities, we can get some idea of where Spotify might be headed.
Right. So first, let's imagine Spotify keeps dominating music streaming and successfully moves into other audio formats: podcasts, audiobooks, even live audio.
So picture this. You open Spotify, and you can jump between your favorite music playlist, a podcast that's got you hooked, an audiobook you're lost in, and even a live concert, all in one app.
That would be the ultimate audio hub.
Right.
To get there, Spotify would probably invest even more in getting the best content, developing new tech, and partnering with the right players. They might make exclusive deals with big artists, podcasters, and authors to draw in even more users.
They could create cool new features that make listening even better. Personalized recommendations for live events, interactive stuff within audiobooks, building this whole engaging audio world.
Totally. But even in this rosy picture, there are hurdles. Staying on top in a fast-changing market means you gotta constantly innovate and adapt. Spotify would need to stay ahead of how listeners are changing and what new technologies are coming.
And as they get more and more content, they'd have to handle all those licensing agreements with different people who own the rights and make sure the content is appropriate. It wouldn't be easy.
Definitely not. Okay, let's flip the script. What if Spotify starts facing more competition from the big guys, like Apple, Amazon, Google? They all want a bigger slice of the audio entertainment pie.
Those companies have tons of money, resources, and they're already big players. They could really challenge Spotify. Like, what if Apple Music starts offering exclusive stuff with their other services, or Amazon uses its huge e-commerce reach to give discounts on audiobooks?
In that case, Spotify would have to stand out somehow. Maybe focus on specific audio genres or cater to certain groups, building communities around shared tastes.
Yeah, they could even partner with companies outside of tech, media companies, record labels, even car companies, to offer something unique and reach more people.
To survive in a tougher market, they'd need to be flexible, adapt quickly, and always focus on giving value to both listeners and creators. They couldn't afford to just sit back.
Okay, now for a real mind bender. What if Spotify goes beyond just audio? Becomes this bigger media and technology platform, offering all sorts of services and experiences.
Whoa. So Spotify, with social media features, you could connect with friends, share playlists, discover music together, or maybe they jump into virtual reality, create these crazy immersive concerts or audio adventures.
Right. They could even explore things like fitness tracking, mental wellness, or education,
Yeah.
using audio to help people learn and grow.
Yeah, the possibilities are endless.
It would be a whole new way of thinking about what sound can do.
To pull it off, Spotify would have to invest a ton in new tech, hire new people, maybe even change their whole brand to match this bigger mission. It would be a huge, bold move.
They also have to deal with new rules and ethical issues as they enter these uncharted territories.
Yeah.
A lot of unknowns. But it could also mean huge growth. Spotify wouldn't just be an audio entertainment company anymore.
They could become this multifaceted tech company shaping how we live, work, and have fun. It'd be incredible to see.
Yeah, it would. But these are just 3 scenarios. The reality is probably going to be a mix of all sorts of things. The future is full of surprises. Spotify's success will depend on how well they can predict trends, adapt to change, and keep giving their users and creators something valuable.
That's the bottom line. Spotify's in a world that's constantly shifting. If they can keep innovating, experimenting, learning from what works and what doesn't, that's how they'll stay ahead.
So that wraps up our deep dive into Spotify's Q4 2024 earnings. We've seen their incredible performance, their move into new areas, and even thought about what their future might hold.
We covered a lot, from their financials to their big dreams. Hopefully you learned a few things and feel like you understand Spotify a little better now.
Thanks for joining us on this deep dive. Keep listening, keep learning, and keep exploring the ever-changing world of media and technology.